Good day to one and all. This is Dr. Sivaraman of iknowindices.com. So I'll be doing part 2 of Tracking the Forex Market Together webinar between 14 and 14:45 GMT on November 1st. So I was giving part 1 of the webinar between 9 and 9:45 GMT during the European session. So now it is 30 minutes past the start of the US session, so 14 GMT. So we will review the live market code page and see where exactly the market is when compared with that of the European session. So I have given the link for the live market code page. I'll also focus the camera over that of the live market code page. Okay, now you should be able to see the live market code page. Euro is currently trading around 1.3653, 1.3655. The low is 1.3609. As I explained that from that of the Japanese session, they started making the drop, and normally the intentional move is for the 2 sessions on the start of the 3rd session, and they had done it they dropped and formed the low 1.3609 and started gaining the level. And now you come across the ISM data, and for that they are expected to make a small reactions and subsequently gain the levels. So let us see how exactly they are going to make the moves and also take trading decisions. The high was 1.3870, which was set during the start of the Japanese session. Afterwards they are not breached. Similarly, in the case of GBP, they breached the psychological level 1.59 and then they have gone up a little bit and currently showing 135 pips negative net change. Still, Euro is showing about 208 pips negative net change. And when compared to that of European session, Japanese yen was showing negative net change or making a downward move. I was telling you that they are just dropping Euro and GBP and also USD yen as a contrarian move to bring down about 150 pips. Drop in the case of Euro yen and GBP yen, and now they have started gaining the levels because USD yen started gaining it, and also Euro and GBP are nominal gaining from the low. Then in the case of USD CHF, if you see carefully that they showed about the 89 area during that of the European session, and then from there about 58 pips they are gained, and currently trading around the 89.22, 89.25, 155 pips positive net change is seen. During that of the European session, when we are discussing, they quickly gained the levels in the case of, Asian session. They were holding USD CHF at a lower level and quickly gained the levels using some trigger. And now you find 200 pips drop in the case of Euro and 150 pips gain in the case of USD CHF. USD CAD is currently trading around 1.014852 and the low was set during that of the Japanese session, which was not disturbed, and then subsequently after the Canadian data, they gained the levels to that of 138 pips, 1.0184 level. And Australian dollar, all along they dropped about 220 pips and made a drop below that of the psychological level 1.03 and then quickly gained the levels. So these are all the current levels you come across. So I will just show the initial lows and the highs, and then we will make a reference to that of those levels. Then we will be able to take a trading decision. Now, during that of the Japanese session, Euro was showing the low 1.3814, and then from there they came down to 1.37 area during the European session. I was telling that this is not that time to take sell positions here. And you know that I have not taken any position during that of the European session because as a policy, after the drop, we are not supposed to take sell position. After the rise, we are not supposed to take the buy position. Just because they had dropped Euro 200 pips, and you might repent that we could have taken a sell position around 1.3740 and booked about 100 pips profit. But next time they pretend like that and reverse it, and after the drop, if you just sell, you might be trapped vulnerably. Unless and otherwise, we use tight stop and just keep stop at entry and that sort of strategies, then it will be easy for us to earn money from that other market. Otherwise, it becomes a stressful trade. Since throughout the day they have been holding below that of the low set 1.3814 in the case of euro, we identified that it was an intentional move. So Japanese in the European session they have dropped, and US session they don't do hat trick. So obviously you will come across a pullback and going up. So that is what happening at the moment. Similarly, in the case of GBP, 1.6054 was the low and initial low. They breached and came down to that level of 1.59 and below that of that, and subsequently gained some level to 1.594043, etc. In the case of yen, they have been holding around that of 78 and that is not been breached. The low they just made a downward stop, and during that of the Japanese European session, I was explaining it. Within 30 minutes they came up, and now they gained to 78.25. Slowly they are expected to gain the levels again in the case of USD yen, along with that of euro and GBP, to pull euro yen and GBP yen on the upside. Then Australian dollar, they made a massive drop again from 1.0499 or 1.50 level, the initial low, to 1.0272. And you come across a net change of 215 pips currently. And for the down, they came down around 30 pips below that of the current level, 1.0310. And they're expected to gain some levels and hold at a higher level tomorrow before making further drops. That is how the market, they bring in the cycles, and we have to understand that they do not continuously drop. And people might think that because of 200 pips drop and yesterday's drop, think that euro has undergone a big drop. But this is the way they drop and buy. And if still the higher level long holders hold, they make one more drop. And after gaining the level, tomorrow people might think that, okay, euro could come to 1.40 again, so let us wait. Then they will show again 1.36 or 35 and give them the sleepless night or induce them to liquidate even after waiting. Then subsequently they are expected to take the market upward. In the case of Canadian dollar, you know that the initial high was 1.0008, and you find that they have gained substantially from that 1.0184 and currently trading around 0142. And so in all the currencies, you come across the USD gaining move. Euro and GBP showing negative net change, Australian dollar showing negative net change. They are the numerator currencies, and the denominator currencies, USD yen, USD CHF, and USD CAD, they are all showing positive net change. So, but nobody calls it as a USD gaining move. Instead, people will say that euro weakness, GBP weakness, or euro weakness is just dragging GBP down, etc. So, having understood that the market, they are holding it below that of the initial low what they have set during the day, and they have done the intentional move, and they don't do the hat trick of continuously dropping it for more than 2 sessions. So a pullback is expected in this particular session. So what happened to the high and the low? The high was not breached in the case of euro and GBP, whereas the low was breached. And then subsequently, they formed a new low towards close of the European session, and during that of the US session, they started gaining the levels. They are holding it, and after the ISM, they are not made any drop, and they are expected to gain the levels. So let us take trading decision. And what positions we decided and what happened to the trades, I explained. I was sorry. During the European session, I was not taking any position because I was explaining more about the trading strategies and the usage of hedging. So there was very little time left out. So I said that it is better to take the positions during that of the US session. Anyhow, market continues to give trading opportunity. This is one example wherein I have not taken any position during US session, and European session. I will take positions during US session now. Now, for the benefit of those who have joined for the second part, after that of 30th of October, the daylight saving system is off in Europe. So accordingly, there is a shift in that of the trading timings of the players. So between 7 and 7:30 GMT was the earlier gap time. Now it is 7:30 to 8 GMT. So 8 to 13 GMT will be the European session. 13 to 13:30 GMT will be the gap time. That remains the same. After the 6th Sunday, US also will go off with that of the daylight saving system. Then subsequently you will find Japanese session starts by 0030 and 7:30 gets over. 7:30 to 8 GMT will be the gap time. 8 to 14 GMT will be the European session. 14 to 14:30 will be the gap time. 14:30 to 21:30 will be the US session. 21:30 to 0030 GMT will be the gap time before the start of the next day. All the gap time moves are false move. Keep that in mind and try to trade. And we have been seeing very frequently, if you follow the timings followed by the other players, you will be able to understand the type of moves what they do it. Now with regard to the basic trading strategy, which I explained during that of the European session, it is being recorded, and I wanted to rush up quickly so that I can really take positions. So we track the market using the GMT time frame, so that a 24 hours market we can easily track using the live market code page. We don't use any chart or any other statistical analysis. We just do the visual trading using that of the live market code page and relate the current market level to that of the high and the low set for the day. And this I am doing as a statistics professor, because after prolonged research I found that the statistics are being respected by the market, but the manipulators, they try to make the stop ends to the below that of the support and above that of the resistance, and make certain unexpected moves in the market, which we will not be in a position to identify with the help of the statistics, because it is derived based on the past performance. And also you come across the disclaimer, the past performance does not guarantee the future. So if you want to see in live condition whether they are going to rise or drop, after the rise or the drop, we can always say that they made the rise because of the resistance, they have dropped. But will you be able to say at the time of taking position they are going to rise or drop? That we need to identify. So for that, we watch the gap time and the sessions, and the session is further subdivided according to them. It's not my own decision. According to them, first 1.5 hours they handle the majors, the start of the session. The last 1.5 hours they handle the majors again, like Euro, GBP, USD, Yen and USD, CHF, and also Australian dollar and Canadian dollar. And during the mid session they handle the crosses like Euro, GBP, Euro, CHF, GBP, Yen, USD, Yen, etc. All the European crosses and the Yen crosses they handle during that particular time. So if you are focusing on the majors, you just observe 1.5 hours from the start of the session, 1.5 hours to as close of the session. You will be able to complete the trading. You need not watch 24 hours the market. Then you relate the current market level to that of the high and the low. Now if you relate the market, already they have gained the levels, and they have just come to 1.3668, and as I explained, the third session they started gaining the levels. Anyhow, I may not be able to take positions, but still I can explain to you how they are making the moves. We can easily determine beforehand and see exactly they follow a system. We need to identify that particular system, then we will be able to earn along with them. And take positions only in a currency pair where there are 40 to 50 pips spread and more. And a currency which has got a lesser spread between the high and the low, don't enter into that. It may not give any profit, either a sell or a buy. When the market is near that of the high, we'll take a sell position when the high has not been breached in first 30 minutes from the start of the session. Like 13:30, US session started, and 14 GMT, they have not breached the low. Now market is closer to that of the low, and still it is far away from that of the high. We know that our initial low will be the target at the maximum 1.3814 in the case of euro, and so we will try to take a buy and just trail the stop in a profit making position. As soon as we enter the buy position near the low, we will try to keep 30 pips hedging order or a stop to limit the risk only to 30 pips, and once the position makes profit, we'll try to keep stop at entry and remove the hedging order. Thereby, we eliminate the risk and subsequently trail the stop, maintaining a distance of 30 pips from that of the market, and as the market slowly gain the level, we'll be able to see the profit. Then we can keep the initial target in a trade of this nature because they breached the low and formed a new low during that of the start of the US session. So we will try to keep a limit order 1.3810. 1.3814 was the initial low. So we'll try to keep 1.3810 as the limit for the trade and try to see whether the market fills our limit order or the trailing stop. So we don't take any risk. We only take a calculated risk or a profit adjustment of 30 pips. If they hit our stop, our profit is less. If they hit our limit, then we get the maximized profit. So in a speculative way, looking at the chart, okay, it could break and probably it will go up and things like that. If you don't use the trailing stop, they may probably reverse and hit your stop and go up. So don't give any chance for them to hit your stop when it is placed, or the hedging when it is placed 30 pips below that of the buy or 30 pips above that of the high. Once you keep stop at entry, then you don't bother at all. If they hit your stop, you don't lose any money. See, ultimately we have come to the market to earn money. So in that process, we should not lose. So you don't lose your money once you keep stop at entry. And if they hit your stop and go up, doesn't matter. You can even take it, wait for 30 minutes. And if they are not coming back to that level, you straight away understand that they have done the stop and they are gaining now. So let me re-enter again a buy even at a higher level. They will try to go up. And in case if they hit your stop and go below, then you get further downward level to take a buy because already they had dropped 200 pips in the case of euro. For the downward move will be very limited and there should be a swing trade opportunity. They will not simply punish all the long holders all the time. You know that players alternatively punish the bullish and the bearish traders. So if you are neutral, you are not punished. Only if you turn bullish and bearish alternatively, then you will get trapped either way. Then the exit will be the opposite side by looking simply at the live market quote page or the initial lows what you have noted down, a day in which they have made a massive drop of an intentional move like this. And also, in case if they breach the high and the low, what you are supposed to do it? I explained during that of the European session, what is stop and false move. They are the moves which they occur in less than 30 minutes. Extended move is a move which is very, very quick, happens in 2 hours. Intentional move is for 2 sessions and the start of the third session. And so what they have done, we identified as the intentional move. After the intentional move, they are expected to make the extended move on the opposite side. Just for 2 hours, they are expected to gain the levels. Then again, they may go in for a stop trend or a false move and then continue this particular cycle. Extended stop trend is the move. They do it only during trend reversal times. So extended move is always a quick move, commonly called a spike, and they do it in 2 hours time. Afterwards, they stop cutting the new high or the new low. Whereas the intentional move is for a prolonged period. During intentional move, the drop or the rise will be very, very slow. Whenever the market slowly rise, understand they are buying. Next dip you try to buy, you will be able to see profit. Whenever they quickly rise, understand they are making a false move in order to gain the level without buying much from the other market. So they do the circular trade in just a fraction of a second and try to take it to the higher levels like 50 pips, 100 pips, etc. Then you find that you don't have any opportunity to enter. But they quickly gained the levels by circular trade, selling to them and buying back. And by that they don't do really any higher level buy. Even if they do it, that will be a negligible quantity. And after gaining the levels for 2 hours, they start holding it at a higher level, just keep the buy order. And they know very well all the traders who have gone short. Only with the inside information that the traders are predominantly short, they make such quick rise, and then automatically those short sellers have to come for the short covering. Last Friday they had done it that way, and afterwards you come across the intentional move of a drop. Now it is a month and month beginning type of moves, so we need some more focus on that to understand. Probably if time permits, I'll explain later on. So you watch the market every 30 minutes, you will be able to understand how they are making their moves and reaching the initial low or the high and things like that. Now in this particular session, Euro and GBP are expected to make swing and rise moves. So this is the forecast derived from that of the algorithm. So we need to take some positions for this session at least. So currently Euro is trading around 1.3660 and they formed the low 1.3609 and now already it is 14:22 GMT. So let me just keep 10 pips below the current level 1.3661, a buy limit order. So if you have the entry stop facility or the hedging facility, you can keep the hedging order below that so that you can do either way trading. During the drop, you can buy against that of the sell order. If it is filled, then you book profit on the buy side as well. If you don't have the hedging facility, then simply keep the stop. And once the buy position makes profit, you try to keep stop at entry and eliminate the risk. So whether you buy it at 1.3651 or 1.3751 or wherever it is, if you are able to quickly keep stop at entry, then absolutely no problem. If you think that it is a reversal level and try to buy without a stop and they make further downward move, you become panic. So the traders lose money because of two conditions. One is over trading. So if they have $10,000, they try to take about 4-5 positions, standard lots, and when the market moves against them 150 pips or 200 pips, the account gets margin call. So anybody who has got less than $30,000 as the usable margin or equity, then try to take one mini lot at a given time, book profit and maximize the profit and then go in for another trade. You'll be able to really earn well from the other market. Otherwise, you will become part of the 95% of the traders who lose money in the market. Then, the other important aspect is the emotion. So, even though you might have taken a very less position like one mini lot and try to trade without a hedging or a stop and without any plan, you enter simply because you feel bullish and you enter into the market. Afterwards, you find you are the highest level buyer. Then the market started dropping. You become the lowest level seller. So you make a foolish trade of buy at the highest level and sell at the lowest level, whereas the players gain the levels and book profit with regard to all the buys and build sell positions. On Friday they had done it and now they are dropping it and buying at the lower level. So they are sensible traders. So try to become sensible traders that way. Then in the case of GBP currently trading around 1.5946, 1.5950, 1.5892 become the low. They are not breached it. And so 10 pips below we keep a buy limit order. See, we watch for 30 minutes and in the event if they don't fill that, we can just modify and take it to the market during a small dip and try to book profit on that. See how they are holding it firmly, because at the lower level, people would have thought that when euro reaches 1.36, there is no point in holding a long position taken at 1.42 or 1.40, 1.38. So they would have hurriedly booked loss. So now, after gaining the levels, the players are not even making 10 pips dip. So that is market. Then USD CHF, they have breached the high and they have gone above, and now they are expected to make the consolidation in the case of USD CHF around that of 89, and they gained about 135 pips. And already last Friday and yesterday they had done the lower level consolidation, they gained it, and they are holding it closer to the low. And our initial low is quite far away, 1.8794. So we'll not enter any buy position there. So in the case of GBP, 1.59, 10 pips below that of the market. with an entry stop of 30 pips. So that will be 1.5918. Now coming to N, they are just consolidating it, and they are making such a narrow consolidation, and tomorrow onwards they are expected to gain. So if I buy now, I may not be able to book profit. I may get about 10-15 pips profit, but tomorrow they are expected to again aggressively make the gain in the name of intervention when Euro and GBP, they just gain for midweek. And during midweek, they are expected to make quick moves on either side, that too during the part of first week. And so at that time, they are expected to make whipsaw moves, like a very quick rise and a very quick drop, and they just hit the stops on either side. They are not bullish or bearish, but they only induce us to become bullish or bearish. Australian dollar, again, they made a drastic drop to 1.0272. They are not breached the low during the European session, US session, and currently trading around 1.0331. So 10 pips below, I'll try to get a buy. With an entry stop of 30 pips. So I'm taking only a risk of 30 pips. I'm making a sensible trade near that of the low. I'm trying to buy when the low has not been breached. What is the meaning of when the low has not been breached? So anybody who has taken the sell position near that of the low, still they are not given for 30 minutes the profit booking opportunity. So automatically when they gain the levels, already they are dropped more than that of the normal the permittable limit of 150 pips in the case of Euro. So after that, they are not willing to drop it one-sided, so they will simply raise it. There are two purposes for that. One is predominant of the long holders would have liquidated the long positions and build sell positions. So obviously, they will induce such traders who have just liquidated the long and taken the lowest level short, make them to realize that they have sold it at the lowest level and buy at the highest level. They are not fit for trading, and then they try to gain and induce them to do the short covering before making further drop. So this is what they make every time, but still in the name of different stories, we don't recognize the type of moves in the market. So USD CAD again, they gained the levels and to 1.0184 and dropped it to 1.0127. They will hold it and they are not going to make any quick moves in that. So Euro and GBP, they are going to handle it, and also USD Yen, they wanted to gain a little bit later on by holding it currently, because when Euro and GBP are rising, USD Yen, they don't rise it during the third session. Only in the first session, they rise it quickly. So that will be a very quick contrarian move. How exactly they are done during the Japanese session? Euro and GBP are dropping. USD Yen was also dropping. So tomorrow they will just do opposite of it. So for that they are trying to hold USD Yen, now gain nominal levels in the case of Euro Yen and GBP Yen, so that those who have taken the long positions, they may go in for a small profit booking. They may not give big profit, but if they wait, tomorrow they will give good profit. So most of the time, you would have noticed overnight, they try to bring in the changes in the market. So predominant of the traders, they don't hold the positions till such time. So they are very, very smart in that way. So these are all the trades I envisage, and already they have gained the levels in the case of Euro, 1.3681. So they could go up to that of 1.3744. That was the low set during that of the European session. Afterwards, if more shorts are built up at that time, because many traders wanted to sell during pullback and thinking that Euro is in the down channel to 1.30, and they will gain the level above that of 1.3814 and just tell them that the market has reversed, then the short sellers will come for that of the short covering. Then they go below that of the support, the resistance turn support, and then go below and further drop again. So this is how they make the people to accept technical analysis and grab the money from them. So we have to be smarter with that. So during the European session, I was telling that US session they are expected to rise. So in case if I had taken a sell position during the European session, I could have covered it. But when I just show it and say that I had taken profit, then it will give that impression for the traders that, okay, after the drop, you just take the sell. As a policy, we should not do that, so that we will never get vulnerably trapped in the market. So in the basic trading strategy, we have just thought about these levels, but they have already gained the level. We can even enter in the next small dip. We'll wait for 30 minutes, but I may not be able to continue the webinar for such a long time. But wait for the drop and try to take a buy, and again keep 30 pips hedging order. And once the position makes profit, keep stop at entry and try to book profit when they go up to 1.3744. That might be considered as a resistance according to this technical analysis. And then later, that was the initial low they set. Then subsequently, they are expected to go above towards close, because normally towards close when they rise, predominant of the long holders would have liquidated towards close of the European session and build a sell position, and they will come for a short covering during that of the late US session rise. So this is how the market functions on a daily basis. Now you can see how quickly they are gaining the levels without giving any chance. If you see in the live market code page, they continue to show green orders. Has any improvement happened in Europe? I don't think so. But now they will simply say that technically it was oversold, so market is gained. We continue to hear such stories. So let me just minimize the PowerPoint presentation and focus the camera over that of the live code page. Just disappeared. Okay. Now I'll try to answer to that of the questions which are asked here. The live trader, do you expect euro to go back to 1.40 again? Not immediately. They are expected to go back to 1.40 by second or third week of November. And they are expected to go further above that of 1.42 during December. Here in close, you will be seeing that euro becomes so bullish. Then Matthew, can you explain how to keep changing the trailing stop? See, there are many platforms, even MetaTrader 4 has got the facility that you can just keep a distance in the stop, and as they gain the levels in the market, the trailing stop will also gain the levels and maintain 30 pips. In case if they reverse the market, it will not move down. That is trailing stop. And that facility is available in many of the trading platforms. If it is not available, then manually you can move it also. Just change the levels in the stop. If they gain 20 pips, then change 20 pips higher in the trailing stop. Always use trailing stop when the position is making profit. When the position is making loss, initially as soon as it is taken, try to keep hedging order. So now you can understand how market is predictable. So we simply gain the levels just like that. If you think that market is unpredictable, that means you are not identifying the type of moves they are making it. Because they cannot have any haphazard method of making moves in the market. They need to have a systematic method so that they can, in a cohesive way, handle the market. So they have a pre-planned strategy, and that strategy you need to know. So it is nothing but trying to know the weakness of the players and try to trade along with them. Nothing more than that. When you want to defeat a giant, so you cannot use your strength and make him to fall or hit him. You can only find the weakness and try to handle the giant. Then Ram, how much could be the rise in the case of euro and GBP? See, when they are physically gaining the levels, you just watch that. Always have the mindset of reacting to that of the current market levels. See, the estimates can be, when I say that euro can go to 1.47 and immediately if you buy it at 1.37 and hold the position, one standard lot having about $5,000 as the equity, then if they start dropping up to 1.35, you will start yelling at me because you failed to keep stop, you failed to keep hedging order, and you think that I am responsible for the wrong trade and immediately get angry with me, trigger your emotions more and more and quickly cut that sell position, buy position and turn sell. And afterwards they reverse the market and you just book loss there again and try to just come back again and say that, yeah, as you expected, it has gone up. But what is the bottom? You start asking that questions. So just the bottom and the top of the market, excepting God, nobody will be able to tell you. Let me tell you very honestly. It all depends upon the volume. It all depends upon the number of stops kept in different levels. And by hitting the stops, the player should be able to make profit and they should not give profit. So these are all the strategies they follow. So up to what level they can hit the stops so that they'll be able to earn at the same time, not giving adequate profit to that of the predominant traders. They know very well how the traders do the late reactions to that of the market. After the drop, they become bearish and try to sell. Then once predominant of the traders have taken sell positions, there is no point in making further drop. They just make a rise like this. So this is what we need to understand on a daily basis. In that process, they try to come to that lower level. In case if their traders are not liquidating the higher level long positions, then they try to drop it extensively for Monday, Tuesday, like that. Then everybody will say euro has dropped about 400 pips, 500 pips. Why not I take a buy? Okay, fine. You buy here and you see real profit. You don't take any action and you don't keep stop at entry and be very happy that euro has already gained about 100 pips. I want to book profit when euro goes to 1.47. Then tomorrow, late evening or day after tomorrow, it will come to 1.35. So it is over trading which is detrimental to that of the traders. Secondly, the emotional decisions. So control your emotions, then you will be able to become wise trader and sensible trader. And then you will realize forex trading is a child's play. Then Kanan, today gap time move was upside, but no turning back. Yeah, during trend reversal time, some of the gaps, they don't really make big moves. They make nominal dip and then start gaining it. During the start of the gap time, they made a dip and formed the low in the case of 1.3609. Subsequently, they started gaining it because predominant of the traders would have taken sell positions, so they are not revisited again. So we watch. When they are dipped, we only buy during gap time. So we are not trading against. Then do you see JBB USD go up to around 62? See, I think you should also explore the other pages which are given in FX Street, and FX Street is giving the forecast of various analysts. I have given already the forecast which is expected in 1 month time and 1 quarter. So here is GBP is expected to go to 1.67 and 1.72 area by year end. I think 1.62 is covered in that. Not immediately, don't think today. It is expected to drop during the first week. I explained already, so don't forget that. Afterwards, it is expected to rise. And the morning webinar also, I gave the idea that on Friday you can take the buy, or during the week beginning false move on Monday you can try to take a buy. Then happily keep stop at entry and hold the position. Then wicked pin. It's moving down towards 1.3650, price dropping fast. Okay, small dip from 90 to 84, When you look into the chart, you will say dropping fast. Because once the chart becomes narrow, you find such moves become, the big candles are formed in that. We are not buying after the rise, as I explained, that I was trying to keep it around 14, just about 5-10 pips. And if they already gained, it doesn't matter. Next pullback, I will try to do it. And whichever the currency they use it to handle the crosses, then I'll try to take the long position in such currencies. So Euro GBP, for example, they had dropped yesterday about 140 pips, and today they made a nominal drop. And now you find 41 pips negative net change, because Euro is showing 176 pips negative net change and GBP is showing only 128 pips negative net change. And so they are just making a drop and buying it against the sells what they had done, and subsequently they are expected to gain the levels in the case of Euro GBP before making further drop. So for that, what they are supposed to do, hold GBP and rise Euro. So dip, I'll buy. So this is how, identifying the crosses, I identify which pair to enter. That I explained in my trading system. Probably you may, if you are not able to follow that, kindly go through that or ask me later on, I'll explain. Then for your AUD position, you are referring to that of a low 1.0270, not the initial low. Initial low is quite far away. So from 1.0270 is the current low, and they are not breached the low for 30 minutes from the start of the session. That is the rule. Then we enter along in that. And subsequently, when they gain the level, we keep stop at entry and try to book some profit. They may go up to that of, they have dropped about 200 pips. So they may not be able to rise all the 200 pips up. They may gain about 50 to 60 pips or 75 pips. Then we will watch, and the European session low was 1.0380. So they may go up to that and then fall. So that is why I always mention that make a note of the initial low, and then subsequently every session the low what they found, make a note of it. Then you will be able to understand what is the next session and which one will act as a resistance for the rise. Then if they breach the next resistance where. This is what you find in the chart. Then you think that it is working, but suddenly they reverse it. There comes, because we always do the linear study in the chart, but the market is curvilinear. Then I believe that Euro and GBP are expected to rise next week. In that statement, still valid? Yes, sir. Then I trade is a so-called Santa rally correlated with Euro as well. I mean, it is expected to gain as we approach Christmas. Okay, fine. No, I am giving it based on the forecast. Yeah, there could be other attributes also. Then Kanan, how much should the trailing hedging? 30 pips. Then John T, why did you say that the cable low was 1.5948 during the European? Mine was 48.9. No, 48.92 was formed during the gap time. Before that, they formed from the start of the session, and that was the low. They breached the low and just formed 1.5948, and then subsequently made the drop. You watch based on that session timings given, you'll be able to understand, sir. Then Vic, have you taken these positions on your? No, they are all just theoretical positions, because I don't have a demo trading platform here for you to demonstrate it. See, the basic idea is not to show that I am skillful, I'll be able to earn and things like that. It is a question of education. So, me taking the position is not important. You just make a note it in a paper, or just take a demo trading and just see whether it is working. Consistently do it on a daily basis. For a few days or a few weeks. And if you find it has got some meaning for you, then try to follow it. And see, everyone will give certain good ideas, and there might be a certain idea that might be biased. So don't immediately follow any person, including me. You try to find out which is suitable for you from each person and try to build up your own system of trading. And in that, the common factor should be the risk elimination. I don't think anybody giving webinar in FX Street say that trade without a stop. Okay. So risk elimination is the vital aspect in trading. As soon as the position makes profit, keep stop at entry. That is the first step. And you use different methods in identifying your entry and exit. So, but the trading strategy will be the common for everybody. Every analyst will insist upon that. Then I meant what could be the rise today during the US session. Today the players did not continue to drop for 3 sessions. Okay. The rise could be to that of the initial low, as I explained. Then will Euro Yen and GBP give us an opportunity to, now it is mid-session. So if you see that Euro has gained little bit, GBP has gained little bit. It has now filled our buy order. GBP, Euro has not filled yet. That will become a position for us. As I explained, they wanted to gain the levels in the case of Euro GBP. So that is why GBP they have just made a dip, whereas Euro they are not making such a big dip. And in the case of Yen, morning it was negative net change, now it is positive net change. So slowly they are expected to gain here also in the case of USD Yen, but that will be a very nominal gain. So as a result, Euro Yen will make a nominal gain now, and tomorrow it is expected to make big gain. Then DTPT, what is expected of tomorrow? Tomorrow they are expected to open higher after gaining levels towards close of US session and then start making the dumping and make a very quick upward move using some data release during that of the European session start and gain through that of the late European session because it is midweek. Then afterwards US session they are expected to drop on Thursday for ECB press conference. They are expected to make a drastic drop again. And Friday again for non-farm payroll they are expected to make further drop, and the expected number will be much more than that of the expectations of the market. So immediately they will just make the risk appetite move of a gain because the strong number, and then subsequently they will say USD gaining move has to happen, then drop. So that any higher level long holders like 1.42, 1.40, they will just liquidate all the long positions. Next week start gaining like what they have done now. Then in the USD Yen, what is it called when it makes 350 pips in 5 minutes chart, one bar? They call it as an intervention, and I do not want to comment more about the government actions or BOJ actions, but after gaining to 79.85, they dropped it to 78. So they quickly place a very big order and gain the levels, and at the higher level, when people are willing to do the short covering, they have to book profit. That's what they have done it. And hold and support the market around 78. Because if they continue to buy, then they will not be able to support the market afterwards. They have to book profit and re-enter the market at a lower level and then continue the rise. That is what they do it. If you look in terms of candle, I have no explanation for that. But if you look into 1 minute candle, probably several candles will be there. If you see 5 minute candle, it will be one candle. If you see 30 minutes candle, then there will be one candle. So it all depends upon the subjectivity with regard to the chosen time frame. Ultimately, what is more important for us is all quick moves or false moves in the market. Then for FOMC statement, okay, FOMC they are expected to make very less reactions because it will be late night during that time. The interest rate change may not be there, and they will make volatile moves. Probably I'll explain later. I have not looked into it. Then Phil Fib. If price is already above initial high at the start of the session and then come below in 30 minutes, it is still classed as a stop and yeah, obviously. When they just gain above that of the initial high and drop in less than 30 minutes, it is referred as stop and you just watch it and understand. See, just because I say there is no need to trust. So whatever you hear in the market, you have to experiment it. Don't blindly follow it. Then you will not have your own contribution in that. You have to get convinced and then you should try to inculcate the method which is suitable for you. And DDPG, do you see Australian dollar below parity before weekend? No, not immediately before weekend. By month end we will be able to see that. Then weekend. Okay. TDPD, what is expected of US equities? Equity markets are expected to gain substantially in this particular month. Dips are buy opportunities in them. Okay, no more questions. So let me go back to that of the PowerPoint presentation. So now our GBP is being filled, it becomes a buy position. And they made a nominal dip to 58, 59, 41. So instead of straight away grabbing the position at market, then it becomes emotional. Instead, keep 10 pips below the market, a buy limit order, in case if you want to buy. In case if you want to sell, 10 pips above that of the market, the sell limit order, and just watch. It will give the real insight for you whether they are filling it or not. Sorry. And in the case of euro, they have not filled it. So next dip, because from 51 they gained up to 90 and then they have come down to 75. So every 25 pips is a psychological level. So we will try to modify it as 36.75. The next psychological level, then our hedging order or the stop will be 30 pips below that. So this is how we take only 30 pips risk at a given time. Once the position makes profit, we just keep stop at entry. So now 75 is filled. Australian dollar, it is closer to that, and probably you will wait for some more time. Probably you can try it out and see whether it is getting filled or not. And then once the position makes profit, keep stop at entry. Don't become greedy or panic. And always when the position is taken, use in a profitable position the trailing stop to protect the money and the profit. And in a loss-making position, try to use the hedging order to limit the risk. And these two things, if you follow, and I am 100% sure that you'll be able to consistently earn money from the other market. And you can just to disprove that 95% of the traders are losers in the market. So no more questions. So I'll go back to the last slide. I take this opportunity to thank FX Street and also you people who have come here and patiently listen to my talk and also the explanation, the concepts. Try to put it in practice and see whether these concepts are working well for you and suitably modify if you need, because we are all situated in different locations in the world. So we all follow different time frames depending upon our locations. So you might be having that time suitable for you. During that time, I might be sleeping. So that is very common. So according to the time available for trading, besides the trading, you have to look into the other activities of yourself, all the essentials like taking care of yours and taking food, etc., and also trying to help others, your family, etc. Then the spare time, you try to identify, okay, this is the spare time, I will be able to trade. Then once you define such things and find a suitable method during that particular time frame, don't keep awake during late night and things like that and become stressful and strenuous and also become fatigued. And once you become fatigued, the mind becomes weak and invariably emotion grips you. And it will lead only to the wrong trades. And I always say that market rewards patience and not the impulsive traders. So I take this opportunity to thank FX Trade for this opportunity and also you people who have come here. And I can be contacted through email, dr@iknowindices.com. My website is iknowindices.com. If you want to contact me through MSN Messenger or Yahoo Messenger, iknowindices without a hyphen @hotmail.com or iknowindices without a hyphen @yahoo.com. I'm willing to help people and I'm doing it as a mission to help the small traders who want to earn money from the market and at least not to lose for the money in the market. So thank you one and all. See you during tomorrow Asian session live market analysis. Thank you.